Okay, guys, so today we have a guest, Chris Marcus, and we're going to discuss the state of the current economy just to have an idea of what's happening right now. And then we will discuss gold, silver, and miners. So, Chris, thank you very much for being here.
Vladislav, I appreciate you having me on your show. It's nice to meet you today, and certainly, yeah, a lot happening in the world economically, and as you and I were discussing, unfortunately, with a lot of military actions happening. And anyway, just hope people watching are well, and glad to be here. So thanks for having me.
Thank you very much, Chris. So, I would like to begin our conversation with the general economy. Chris, the moment I realized the structure of the monetary system, I became more entrepreneurial by default, and I got involved with gold, silver, because it's sort of insane what's happening, how they can control the currency and everything. And I had people on my show talking about that they believe we are already in a recession. Others believe we are in this stagflationary period similar to the 70s. What's your view on what's happening right now?
Well, I mean, I think you could make a good case that if you were actually looking in real terms, which means when an appropriate inflation rate is factored in, that you could say we've been in a real recession for quite a while. I know the latest plan since the initial Trump administration plan didn't go so well is now, well, we're just going to grow our way out of it, yet does not look like that's going to be done other than piling on more debt. And I think we're mathematically past the point where you say, all right, we're going to grow faster. But if the debt is growing at a rate faster than your growth, you have a problem, which is pretty much where we're at. And even aside from that, I guess you have, like you mentioned, those monetary issues in the background, which I think are starting to come to a head now. I mean, people who have been studying gold and silver have heard, for decades and years saying, "Oh, well, one day, watch out. This might become a problem." And I think we're not waiting anymore. We're seeing this happen. We're seeing a large portion of the world actively make arrangements to move away from the system that we have. You've seen gold take on an increased role in recent years, so a very volatile time, especially with these tariff policies that are being implemented, and let alone at least the news I hear in the last couple of days, and maybe you can comment on this as well, but it seems like things between Trump and Putin have changed, and at least opening up the possibility, A, of more, obviously some horrible things if any military escalation continues. But to the question you asked about the economics, we saw what happened when the US sanctioned Russia 3 years ago. And that's the exact time the central bank started buying gold. And now they're talking about additional sanctions. So all these things, tragic from a human standpoint, but certainly from the economic standpoint, they are all connected. And that there's a reason why you have gold setting all-time record highs and silver now at its highest level since September of 2011 when it was on its way down from 50 earlier that year. And certainly we can dig into those things and hopefully not shell shock anyone who was living through that and has a painful memory. But interesting times, at least for the precious metals markets.
100%. And also, if you look at gold, so gold performed really, really well. And at least in my estimation, it's not because everyone suddenly became interested in gold. It's more because the big players, the central banks, they're interested in gold. And if that sort of trend moves towards public, that would mean we would have a lot further to go. What's your view on gold right now and its current price?
Yeah, well, certainly the central banks coming in and they first time ever they crossed over 1,000 tons a year was in 2022. Then they did that again in 2023 and 2024. So it's perhaps not an accident that you saw the gold price rise during that time. Obviously, it accelerated beginning last year. But I think we're getting a growing awareness, maybe not as much in the West, but behind what I said before about how years and decades ago people were warning about these things. I guess where it really becomes a problem is when the concept that if we're going to use the treasury as a long-term store of value on not, just some guy's, IRA account or portfolio, but nations storing reserves, when you get to the point where now the first step, let's take a step back. The first step is gold and silver bugs saying, hey, this isn't ideal. The US is spending a lot of money we don't have, which I think was all true. But when you get to the point where, from a fiduciary standpoint, that concept of putting proceeds into treasuries, with an example being if you have an oil exporter, they dig their oil out of the ground, and it used to be, okay, well, we can store this in the treasury, we get a rate of return. But if now you're getting to the point where, because of what's happening in the treasury market, and this is before we've had some danger moments where we've seen chaos in the bond market. I don't think we haven't had a failure, or it hasn't gotten where I think it ultimately has to go, because here, big beautiful bill or not, no, we're not cutting spending. That walked out the door seemingly with Elon. So when you get to the point where you dig up your oil, you put it in treasuries, and then when you need to call on that, you end up getting less barrels of oil back. That's what I think really changes it. When countries, which we've seen in the BRICS, get to the point where not only are they saying they don't want to use this dollar infrastructure, but actually shifting away from it, continuing to build infrastructure to shift away from it. Once you get to that point where, this investment, I mean, it's aside from, well, I think I'm going to get a short-term return on a treasury position. I mean, it's hard to make a case, any sort of investment case, over a longer term. And once you have that, that's why now I think so. I think we've crossed. We're in the pool now, and that's been reflected in gold as one of the alternatives. And I think you could make a reasonable case that, rather than this, and this will take a step back, not short term. I don't know what gold's price tomorrow or next month is going to be, but I think you could make the case that we're still in the beginning, early stages of what's happening now. What timeline you would have put on that, but I mean, you tell me, what is the scenario that could happen where all of a sudden you would go out and say, all right, well, the U.S. Treasury debt barely breaking. I mean, they're using a rigged inflation rate, so anyone who's buying stuff can see that you're getting a negative real return. So I don't see what changes that. Maybe you had a shot when Elon came in and they talked about cutting spending, but it doesn't seem like that's going to happen. And I think that was a big marker, because anyone who thought, well, maybe when it gets late in the game, they'll finally take it seriously, and you saw what happened. So I think that, I don't know, maybe 10 or 20 years from now, we'll be able to look back. Well, maybe that was the final warning sign, but the reason, again, why I say that there's a good case to be made that we're still in the beginning of this shift is that you look at how much money is in these treasury markets, not just the US, but you have a whole bunch of governments that are in equal or worse shape. What is it that changes it, that people are going to be swayed back to say, yeah, I want this paper that's not beating inflation? So you're seeing it happen now, and I think again, we'll see what life has in store, but there certainly is a good case to be made that we're going to continue to see more of that.
Yes, I fully agree. And also, if we look at the deglobalization, the fact that countries do not trust each other, we've seen what happened with Russian assets being frozen. So if China looks at that, if other countries who might want to do things that the West would not agree with, they're not going to store their wealth in bonds, right? They're going to look into move it into gold, possibly Bitcoin. I wouldn't really know too much about how that would work, but certainly moving away from the dollar is looks imminent to me.
Well, if you just saw the central banks set records for the amount of gold buying after the US sanctioned Russia, keep in mind the Europeans keep talking about just confiscating the money. They have not done that yet, but that aside, that's what happened in 2022, and we've seen the response. And now we're at the point where I believe who's right or wrong in the war, but just to the economics that Trump, who seemed to be a lot better relationship with Putin, and I'm sure people remember when he was campaigning saying that he would end the war in a day. And as someone who was thinking through the voting process, that was something that certainly impacted how I felt between the two candidates. And yet here we are, and now we're talking about additional sanctions. So if that's what happened the first time, and now we're seeing this shift, it, again, what is another nation sitting there? How is it that they're feeling more comfortable today, regardless of which side of is right or wrong? But you know that people, to varying degrees, have their sense of morality, and then there's my money over here. And to the degree of here's my money, it sets a dangerous precedent. And we've seen how financial counterparties react to that.
Yes, 100%. And I think, Chris, what a lot of people don't understand with the war between Russia and Ukraine is that Putin, he wants the whole Ukraine. And I suppose what people, if they want to, pick sides or whatever, that's obviously not for me to say. But it's, do you believe that you should abandon Ukraine and let them do their own thing? Or do you believe that what Putin is doing is wrong, and you believe that you should help them with money? And that's obviously a decision any person needs to make themselves. But I think it's really as simple as that, because people say the NATO started the war, whatever. I don't really want to get into that, but I suppose the point is, from Russia's perspective, their goal is to take Ukraine, especially when they're so much invested. And what the West, the US, I suppose the people, because the US, that's pretty much the people, what they need to decide will be, well, do they want to help that country who's been, invaded by another country, or, we don't want to get involved and it's something else. At least that's my view on the matter.
Yeah, well, I mean, I'll certainly defer to you, and it was helpful this morning. Obviously, you mentioned you're from Ukraine, so I couldn't imagine. Hey, I know you have family there, but I'm not revealing anything in our interview, but a lot of complex dynamics, and just for again, from the standpoint of what is the impact on different counterparties, that part I can speak to, and again, I hope for peace in some way, and even if it doesn't look like it's quite headed that way right now.
Hmm. Thanks for that, Chris. So I would like to move to, I suppose, still in the topic with gold. So because gold performs so well, in a way, it's more difficult to buy it right now, even though we have all these trends. We have the monetary system in the way it is. It should, the thing should look good for gold in the future. But I believe, at least I have a lot of my attention on the miners, because a lot of them did not perform to the way we expected it. They could perform, or they should
Well,
perform.
they're coming back. This is finally your year, so make sure you remember that part too. But sorry, continue.
And I suppose the big companies or the good companies are already printing cash, and they're doing really, really well. So the current prices should be, you know, should look really good for the miners for the future. What's your view on that, Chris?
Yeah, well, it's a great question because you did have that period. I remember, I would say the low point of well, at least the bullion market, and certainly this was tough days for the miners as well, was back in September of 2022. I remember I just gone to the Silver Symposium, and I think it was the first day that the conference was going. I think it was September 1st, and silver actually dipped below $18 back then, and it was a grim couple of days there. So silver stayed down, started recovering a bit. Took I guess 2 years, year and a half, till it started moving in 2024. Although certainly, if people weren't thrilled with their gold and silver holdings, as you quite well pointed out, tough days for the miners. And then even as gold and silver started moving last year, wasn't coming into the miners yet. And partly why I giggled when you were asking that is I was just at the Rick Rule Symposium last week, which I was there the previous year as well, which was last July. And again, by then you had gold and silver moving, but the miners still underperforming. And I would say the crowd at that show, I mean, certainly they like gold and silver, but heavy mining stock allocation. Now you come back and people were you're like walked off the ledge a little bit, but still it wasn't like a Bitcoin party. And this year there was a much different tone because now the mining stocks they have finally moved, and I sat there and heard the question for two plus years, when are the miners going to finally move? So that has begun this year. And actually, Rick often says, and I think he was right this time, right in previous times as well. But usually, what happens is first the money goes into gold, then silver, then gold stocks. Then it starts with the larger producers, and it takes a while. We've just now seen money start to flow into the junior side, even on silver. And that was one of the things that was pretty constant. I had noticed it in terms of hearing from more silver companies that are trying to do marketing, or you have a lot of financings where there were companies that had projects that they wanted to move forward, yet even a year ago they couldn't raise money versus fast forward back to today. Now you have they're doing their financing, they're getting oversubscribed. And there's one company I think they were trying to raise 5 million and they had $20 million that wanted to come in. So it's certainly a much different environment. And yeah, the stocks have finally moved. I would suggest for people that whether you're new or a veteran, but certainly you have your gold and silver and you have the miners. And what I find is people often get frustrated because gold and silver is doing this, and especially if gold and silver are going up. Yes, obviously, if you do the math and you look at the leverage that you get, and over time, I think you have a good shot of that playing out, but certainly it's not a linear process. Remember, I had someone, I think they responded to something on Twitter where they were saying, well, gold goes up a percent, the miners go up a percent. Gold goes down a percent, the miners go down 7%, which I get it. And I mean, there's truth to that. I don't know if that's exactly how it happens every time, but these mining stocks, they're going to be rather schizophrenic. So, you know, obviously, I'm sure you had more fun in these last couple months than the previous couple years, and you've seen when they go, they can go quickly. And I would say, especially now that we're seeing generalist money start to come back into that market again, some of the, especially on the junior side, these are, 10, 20, 30, $40 million companies. So you start getting some, I mean, if you ever have like Fidelity and Vanguard piling into miners, the price has to move a lot just because of the size. It's kind of like why Warren Buffett, he can't buy, small companies because he has so much capital to allocate. So I would say certainly the miners can be a great thing, especially during a gold and silver rally, and especially if you've picked good companies. Although there is a very different set of risks, and also just in terms of setting your expectations, don't expect it to be a linear progression. But hopefully it works out well in the end, and looking better this year.
Yes, and with silver craze, so silver performed also quite well. I suppose maybe not to the extent to which gold performed, but also I think we need to keep in mind that silver usually does perform at the end of the run. I was talking to Lobo Tigre recently, and he was saying that, well, if we would have big explosion in silver, well, that would actually mean that we are likely close to the end of the bull cycle because historically, this is something what we have seen. So, Chris, I would like to ask you, what's your opinion on the current silver price? And would you be still interested in the actual metal, or maybe you would bring your attention to the miners because maybe they are cheaper to the metal, relatively speaking?
Well, I'll answer that last part first, where because I think it's something important that I wish got mentioned more often, but especially within the gold and silver crowd, it's it doesn't have to be like an all or one. And I find there's a lot of that where, well, I have to have 100% of what I have in gold and silver or miners, and I made that mistake. And that's one thing I would say is a mistake because I think as strongly as you feel about it, in fact, the guy who started the trading shop that I used to work for, I remember he did an interview in one of those Market Wizards books. This was someone that trained us that, there are situations, they had a very poker player mentality. So when the odds dictate it, yes, to go all in. There are times when that's appropriate. I remember maybe that was more what I took away. And then years later was reading in the interview, he mentioned that his dad and him used to discuss how if you're not diversifying, you're burning and throwing away your money. And I remember being a little surprised that he would have said that, but there's the math behind diversification. And I don't know if somebody wants to go bet everything they have on a particular stock is not my place to say, but just from my experience, I think there's a lot to be said, and that gets missed often in gold and silver. Um, so keep that in mind. You don't, and I know there's this like sometimes anger, hatred between, if someone talks about precious metals and someone talks about Bitcoin, like it seems maybe there's better thing. You don't need to look at them as the demon, and you can have both. You can have one, you can have the other. But anyway, back to you asked about the silver price. And I would say I agree that there certainly is a tendency of what's historically happened, and that seems to be what's played out here, especially in recent months. Now we've seen the silver move. I would just say this as someone, and I'm not a technical trader, um, and I think there's some degree to which, yes, there are the patterns. We're also living through something that you don't have. And if we get to the point, which I think where the government is rapidly bringing us to, where there's an issue in the U.S. debt market, we don't really have too many patterns of when that blows up, of how all these things react. So maybe the pattern will stay the same in that in the order the money flows. Yet I think we're all, when you look at gold and silver, there's a bit of a different profile. Yes, they both have that monetary aspect, but gold, you've had central banks become a new source of demand. Silver, silver is really the retail investment market. So I don't know how familiar people are, but there's been a lot of selling of retail silver over the past two, maybe even 2.5, 3 years now. So gold has gone up and you've had a lot of new buying. Silver, the dominant player, has been selling a lot more than really time in my, since I've been watching it, 15, 20 years. So you could say, I know silver people and myself included to have a tendency to think, well, whatever the price is, it's not high enough. But you've actually seen it rise in the face of the main market player selling. Also, in terms of if you think that with the debt dynamics that at some point there has to be some restructure, which I would imagine the bondholders will either eventually get an overt haircut or restructure, or they'll get some devalued paper. But let's say you're of the school of thought that you think there's going to be some day where some U.S. official says, all right, can't take anymore. We're resetting the gold price using the kind of what they've talked about with that strategic Bitcoin fund of remarking the, because at the Fed, the gold certificates listed at, I think it's 42.22. So if you remark that to the current gold price, all of a sudden there's a bunch of new shiny dollar bills. Now, could you mark it higher instead of to today's gold price? If you, I mean, we've seen the US do this before. So I know some people often think that's conspiracy theory, but it was the Fed actually that did this back in the 20s and 30s when they or in the raise the price from 21 to 35. So if you think that we're headed towards something like that, I think it's more likely that it would be gold versus a gold and silver element. Certainly, we've seen that in terms of the things that the BRICS have talked about. Also, you have the other factor that you could raise the price of gold and allow governments to write off debt. That doesn't really work with silver because very few of them own any silver. Plus, if you look at the market cap of gold, which is much bigger than silver, if you write up gold, you can make a chunk. But silver, which is so small, even if they did hold it, what price are you gonna write up silver to like 50,000 an ounce? Well, fine, but you're not using it industrially anymore. So, number one, I think there are some of these reasons why if you did have some sort of government action that it would, and I say this as a big silver advocate, but I think it would likely be more likely be gold rather than gold and silver. Now, don't worry, silver fans, because on the other hand, you touched on this before. The numbers continue to show we're running a silver deficit, which also can be somewhat substantiated by the declines in the inventories that have slowed down a little bit. Yet at the same time, what we touched on before is that now you've had, and we don't have an exact or even rough number, but if that selling is coming out of retail hands, then that supply has dropped in recent years too. Do we reach something in silver like the cocoa market where eventually companies just couldn't get what they needed? I don't want to sensationalize things, but all the conditions are in place. Now, imagine what would happen is that if you get $50 silver or $70 silver but we're also starting to hear rumblings like, hey, Samsung couldn't get this and we already have even the banks now talking about how the free float of silver in London has gotten dangerously low. So I would imagine before you actually reach an overt shortage that probably at 50 or $70 silver, I'm sure that a lot of silver comes back onto the market, just how we've seen after $30 silver. Yet what I find intriguing is that even if that is the case, from the longer term standpoint, and again, things can change, but when you look at where demand is now, plus the fact we don't dig into every reason of what's driving the demand, but certainly it doesn't seem to be slowing. We're already running a deficit. Mining supply, it's hard to see significant increases. Even if you got all hands on deck, started mining around the clock, you're still talking about years and in some cases decades if you're taking a project from they're going out exploring and then you're going to bring it into production. So similar with the debt, it's like kind of hard to see, I don't want to sit there like, oh, well, we're definitely going to see that because, we'll see, but it's gets harder to see like what is the way that we're going to avoid an issue here.
Uh,
So some of the key differences in the gold versus silver profile, and hopefully that helps a little bit.
yes, thanks, Chris. And the other thing with the miners, I believe, even let's say we do get the 60, $70 silver, there's a big risk of countries nationalizing those mines as well, because a lot of those silver mines would be in the countries where that's a high possibility. So that would be another shock for the potential supply as well, I believe.
I mean, it's always a risk. Certainly, if you're dabbling into mining stocks or doing more than just dabbling, it is a risk, and that's why mining investors pay a lot of attention to the jurisdictions and to find a perfect jurisdiction these days, not easy, but that's part of the risk profile and why when things go well, you can get larger returns. But it's an asymmetric bet. What is it? One out of 3,000 exploration projects becomes a mine or something small like that. Yet, and But like you said, certainly the jurisdictional risk is important.
And is there a certain stage, Chris, of the company that you're more interested in? So maybe, at the start at least, personally, I was more interested in the large companies, so the Pan Americans, let's say, the all the big guys, and then uh, usually people then move to developers and juniors. So, what do you analyze purely by individual companies' characteristics, or do you look at that trend of trying to see what stage could be the best at this stage of the bull run?
Well, there's actually a chart, what do they call that? The pre-production sweet spot where you can I think if you Google Jeff Clark, I can, if you want, I can look it up and find it for you. You can include the link, but it shows that there are certain points that traditionally, especially right as the discovery is made, and then right as the thing's going into production, I believe was the other one. So,
Yeah, I think it's when the company transitions from exploration to building the mine, and I
right,
think
right, right.
in the first 2 years the price usually doubles. I think I was just talking with Lobo Tiger about that
And then it
yesterday.
kind of dips back down for a while until they actually, are going out and producing. So, yeah, I mean, I think there's a case to be made. Can you factor that in and perhaps put the odds even more in your favor? I think that's wise. I guess I'll go back to my earlier answer that if you can have a mix of all of them, is that at least something to consider? I would think so. And similar to how I would phrase, and I've thought about this for a couple of years now, when hey, I don't, and I'm not going to go tell people you should buy this or you should buy that. Hey, I don't subscribe to the idea of telling people in general what they should do in any context, but I guess in terms of, well, how much metal should someone own? Obviously, if you're speaking to many people, the answer is going to be different for each person. Yet, I'll give somewhat of an answer here. I'll put it like this. If someone has 10 to 20% of a portfolio in gold, silver, or mining stocks, given the way the world is looking today, but even throw all that aside. Let's say you thought you agreed with Warren Buffett that gold is a pet rock. If you ended up with 10 or 20% in a portfolio, even if you didn't have any, particular view on it, just from a diversification effect alone, I think it'd be hard to say like, well, that's a really risky or terrible thing, especially if you're investing from a longer term perspective. So I would say just from a diversification standpoint, it makes sense to have some. It doesn't mean that you have to go load up or do and in the end, I think general rule, are you sleeping well at night and does it feel comfortable to you? Not what your neighbor says, your buddy or your parents or your kids. But again, it just I find that would be a good way of phrasing it, if that makes sense, hopefully.
So you partially answered my next question, Chris. I was going to ask you about what advice would you have, let's say, for a young individual who wants to get involved in this overall maybe well-building process, but he has so many options. He has the Bitcoins, the Nvidias. He or she can hear us talking about the commodities. Would you have anything else to add to that?
Well, sure. I spent about 10, 11 years on Wall Street, been 13, 14 years since then. So I like to think I've seen a couple of different perspectives. And now as I'm nearing the 50 mark, I was thinking about that the other day. I'm like, did that happen? Um, I think there's also a lot to be said for even more than any particular investment. What is it that is interesting to you and that you're knowledgeable about and that makes sense? If that's Bitcoin, great. If that's gold or silver, great. If that's Nvidia, great. Although taking that a step further, I know you're an entrepreneur, Vladislav, and I think we're given this idea that, all right, I have money. Well, I need to do something with it. So which stocks do I pick? Essentially, you're investing in someone else's business, which can be great and in many and is perfect for many situations. Yet also the idea that, and especially at least for, people who aren't about to retire, the world's changing a lot, although thinking how are you taking your skills, especially if you want to do something that matches what's right for you, and is that something that can be built into a business or an income stream? And if you had a portfolio of X, does it make sense to take Y percentage of that, and rather than be putting it into someone else's business, be doing things that are building yours, which could just be education. It doesn't mean, everyone has to go out and start something tomorrow, but even that process, and I say this as someone who worked in corporate America for a while and then took a while to learn how to think differently, although I very much enjoy where it's like I have different ideas that I can work on or build or put into action. And so I mean I think investing is great. The more, if someone hates crypto and technology like that, and they love farms, then, maybe you're probably going to know more about the farming industry. But it's like start there with a little thinking of like, what do I know? What am I good at? What do I like? And then if you're finding things in that field and then you may diversify a bit around that, that would be my advice. That, or not my advice, but that's what I spend time thinking about and doing. So I'm grateful that I have gold and silver. I'm grateful that I have some mining shares. I also do think that we're being forced to reshore manufacturing. So there's a guy I listen to named Luke Groman, that incredible analyst, and he's talked about that a lot. And so I've started adding in some infrastructure and utility ETFs, which now now it's something that, is just a small position, but at least now it's registered in my brain. I've hit the buy button. It's actually something I remember from my trading days where there's just that difference when, even if it's a small amount, when you actually put money in something, it's just different than when you're paper trading, which is great too. And there's a right time for each. Um, but now my brain is, because okay, the gold and silver is great, but I'm applying the same thing I've been talking about, and it can be in steps. Um, but I mean, I think just again, when you start with, what are you interested, what makes sense, and look at those first. Not that everything has to be in there, but I find that's helpful, and usually you end up with a pretty good outcome when you mix those together.
Yeah, that's a great answer, Chris. I fully agree. And in my case, so my background was molecular biology, and I
Hmm.
hated every second of it. And even before then, I was very much interested in investing, in trading, but I knew back then that I have to do something to get out of there. And that's when, I would spend more than half of my salary investing in silver and gold and miners, educating myself just to get out of there as soon as possible. And then, trying to share your knowledge and create business and bring value hopefully to people. So that
Yeah, so it's like imagine if someone said, "Hey, I need you to come work for me and help pick the best molecular biology companies." I mean, you probably could do it, but I find that in any area of life, there's different levels of the way people do things. Some maybe not the, I feel maybe they don't put too much effort, and then you find people that really are trying to provide value, do things at a high level. And if anyone finds some field that they're interested in, it's going to be a lot easier to do that. And there's going to be opportunity anywhere. You could find opportunity in molecular biology. You can find opportunity in gold and silver. You're doing a podcast, so you're going out and creating based on something that you have an interest in. And I think that's a great example of that. So I appreciate you sharing that.
so that's all the questions I had, Chris. Do you have a final word for us?
No, well, I just appreciate you having me on, and it's fun to talk about these things. I started doing this 15, 16 years ago and thinking that there's a path that we're headed down, perhaps took longer to start seeing the more overt signs like we are now. It's going to be an interesting time. I won't make a price prediction here, but certainly when you add all these things together, it's sometimes a little shell shocking watching today's financial markets, but at least in terms of if you're, and again with investing, if you're something you enjoy, like I find it's interesting seeing how these different things fit together. So from that perspective, certainly a fascinating time. And again, I just appreciate you having me on here and hope everybody watching is doing well and safe today. And we'll see where life takes us next.
Thank you very much, Chris. It was great having you, and I hope to have you back.
All right, appreciate that. Thanks so much.